Good morning, and thanks for tuning in for another week. Here we are in the middle of tax season, and I wanted to go through three tax mistakes I see quite regularly and some very quick solutions on how to fix them. So, first and foremost, for those of you still working, you need to take full advantage of your employer sponsored plan. So, let's call it your 401k plan. I can't tell you how many people I see. They'll come into the office and they'll say, well, Zach, I'm doing the maximum. My company matches 5%. That's what I'm putting in. That is not the maximum amount that you can be putting in your 401k. So if you feel like you are paying more taxes than you should be, well, let's be honest, that's all of us. But if you're trying to look for tax breaks, that is the quickest and easiest place to find some. So increase your 401k contributions. It does not take more than a couple minutes. Log into your plan, log into your payroll provider, and bump it up, even if it's 1%. You'll thank me later for this, and it's a way for you to keep more of your money and not giving it to Uncle Sam. The second thing, don't overlook some of your deductions. And I mean, this could be a laundry list of items, but for a good example, let's talk about your charitable deductions. A lot of people give regularly. Make sure you're doing it in a tax efficient manner. And there are a number of ways to do that. I've talked in the past about QCDs, qualified charitable distributions. If you're older, using your retirement account to pay the church, pay the charities, whoever is receiving your funds. You could also utilize a donor advised fund. You could give appreciated stock or mutual funds instead of cash. There are a lot of ways for you to still give to the organizations that you care about while also receiving a tax break. So just be mindful of how you are giving and what you should be looking for. That was just one example as far as your deductions. There are countless, but I think that's one of the easiest solutions I see and something that people should be taking a couple seconds to look at. And finally, let's talk about withdrawing money from your retirement accounts. The biggest mistake I see is withdrawing with no plan in place. And when I talk about a plan, it doesn't have to be overly complicated or super detailed, but a lot of people do find themselves pulling a chunk of money out with no plan whatsoever. And what could that do to you? It could raise you into the next tax brackets. It could affect your Medicare premiums. It could literally cost you thousands. So a very quick solution of this is just think for a few minutes. What's the plan behind this? Where am I at within my tax brackets? Where do I have to go? If you're younger and you're changing jobs, consider rolling your 401k money into an IRA or into your new company's plan. Don't just cash it out. You could have way more unintended consequences than you meant to have. Well, again, thank you for tuning in. Hope we can keep a little bit more money in your pockets as opposed to the government's. Have a wonderful weekend, and we'll catch you next time. Take care.